Facebook page, do you see it say, you know, Back9 is live? Okay, refresh. All right, so get on in there. You should probably just click on the post. All right, then hang out a sec. I'm trying to find the option. That's great. Okay, I am multitasking and watching a video on how to do this right now.
To watch your live stream. So once you're live, the person that you want to interact with or add into the live stream is on there watching as well. And it might be easy beforehand to ask them to comment so that you can definitely see that they're live. Just tap on their profile.
Hey, Mike, can you make a comment?
You can also swipe across to the side and that'll show you your live viewers, where you can pick who you want to join your live stream with you. And again, just tap on the person and hit invite.
There he is.
Once you've invited someone, they'll receive an invitation on their phone to join your live stream. And all they have to do is hit go live and they're in. It only takes a few seconds for them to join. They'll appear up in the top right corner of your phone. And that then is exactly what your viewers will see. Now everything else here works as normal. You still get all.
Yeah, I know. Sorry about that. I'll switch that back. All right, I'll get there.
That would make sense. That's what you're doing.
All right, Mike. I'm going to call you right back. Hold on a sec. Hey, good morning or good afternoon to some of those. This is Reed Tattersall, your host for today. This is our first Facebook Live event with 2 presenters. So give me just 1 second as I figure out how to do this.
That then is exactly what your viewers will see. Hit go live and they're in. It only takes a few seconds for them to join side and that'll show you your live view. Just tap on their profile picture. You have the option there to invite to broadcast. You can also swipe across.
All right, we are almost there.
We all know.
All right, well, good morning again. Once again, this is Reed Tattersall and Mike. I presume you can hear me at this point. When I say Mike, that's Mike Ruskowski from John Hancock. And ladies and gents, I'm having a little bit of trouble having two presenters on Facebook Live. So I'm going to go ahead and get started. Mike, if I'm not able to get you in here, I owe you one for setting you up here. But today's presentation is all about long-term care and life insurance. So by now, I think everyone's heard of that life with long-term care story. I want to take it a little bit further than just the basic education and show you how to do a quote and even how to do the application. The concept is really easy to understand, and I'm confident enough that you can, if you wanted to today, start running quotes and take your first application as well. So I'm going to show you how it works. I have Quote and Apply open. Quote and Apply, if you don't know, is our multi-carrier quoting and e-application software for life insurance. And I'm going to go ahead and get a quote. So I have John Doe. Great to meet you, John. What's your gender? John's a male. We're going to say John is in good health, but we can go standard all the way to super preferred. I'm going to say he's a non-smoker. If you do put in that he is a nicotine or marijuana user, the system will quote. It's got all the carrier rules into it. So I'm just going to say never, keep this simple. You can optionally put in the height and weight, just like with smoking details. If I put in height and weight, the system will calculate based off of the carrier's build charts who's going to be most competitive. But sometimes as an agent, you don't know a client's weight before you quote them. So you're welcome to put it in if you don't have it. That's why we have this skip button. And this one we have to put in, right? What's the client's date of birth? So I'm going to say we have a male who is 01/01/19. Let's say they're 1959. I think that would make them 60. So that's a nice, long-term care age. By default, you'll see term insurance, term up here, and we have our term slider and our term products. What I want to show everyone today is permanent. And then we have LTC rider, stands for long-term care rider. When I click this, it's going to reach out to John Hancock, and it's going to begin to show me real-time John Hancock rates. So for $500,000 of coverage on this male preferred health 60-year-old, it's $8,000 per year. How does it work? We have a 4% rider on here. So 4% means 4% of the $500,000 death benefit. So 4% of 500,000, we did the math for you, is 20,000 per month. You can spend all 500,000 on long-term care. So I think that would be 25 months. So if you use the max, $20,000 every single month, you would deplete this entire $500,000 pool of money and you'd be out. Now, if you don't use all $20,000 a month, let's say you use $10,000 a month on average, you could then use that for 50 months. So the nice thing about this policy is you're going to get 100% of this 500,000 at a high rate. Traditional long-term care is, let's say, around $6,000 a month is a typical policy these days. And yes, there is inflation usually built into those. With the life of long-term care, especially with John Hancock, you have that built in. So you have a much higher monthly amount to begin with. A huge benefit of life with long-term care, in my opinion, is the flexible premium duration. So in the traditional long-term care space, we really have a lifetime option now. And a lot of clients may not want to pay a premium when they're 80, 85, 90 years old. So the ability to change the pay duration, and I'll change it down here to show you. So pay duration, I'm going to change it from lifetime to, let's take a look at a 10 pay. So now this male 60 can basically pay a little less than half of the, or less than double the lifetime premium. So it's about 15 grand a year. And after 10 years, policy isn't paid up because it is a non-guaranteed contract, but based off of the current assumptions plus a little wiggle room, policy should last all the way to, I think, age 125 in this contract. So I highly encourage agents and clients to get to the finish line. You know, the way that you win with these life insurance, these permanent policies, is you reach the end of the premium paying period. We see it all the time where a client will pay for a premium several years later, either fall on hard times, change their mind, and they become, I guess, another statistic where they paid a bunch of money for a life insurance policy and didn't get anything for it. The sooner you can get your client to that period where they're done paying premiums, the sooner you can kind of ensure that they're going to see the value that you're talking to them about. So this is a pretty great design, right? So I'm going to have to pay $15,000 a year for 10 years. So that's going to be $150,000 to get $500,000 on an after-tax basis that I can use while I'm alive to pay for long-term care. And if I don't need long-term care, then I have my death benefit. So obviously premium duration here updates. The premium duration is even more flexible actually. So just because you start with a 10 pay doesn't mean you need to end with a 10 pay. At any point in time, you can get an in-force illustration and say, how much do I need to pay if I want this paid up now in 5 years or 15 years? So it's one of the great things about these flexible premium contracts compared to a whole life policy. So another very popular sale is the single pay. So think, I think MoneyGuard probably made this famous. So this is kind of a MoneyGuard alternative. A lot of people don't think of like a John Hancock Protection UL in the same realm as one of those MoneyGuard designs, but you should. And the reason you should is typically you get more bang for your buck, right? In this example, it's $132,000, just a single premium, which leverages $500,000 for life with long-term care. These designs are obviously simple to illustrate, and it's a very simple story with your client. We're going to take $132,000. It's going to get you $500,000. You can spend it on long-term care, and if you don't need long-term care, you don't need the entire pool of money for long-term care, then you have this $500,000 pool of money. We've seen this, some great sales. I guess I can call it the widow client. Right, you're dealing with female, age 75, widowed, and you may even be dealing with kind of like next generation. Maybe you're talking to, widow's daughter or son. This is a fantastic plan because now mom is covered for long-term care, and the son or daughter can be assured that, if mom or dad doesn't need long-term care, well, this money is probably going to come back to them. While I'm kind of hovering over this right here, this is the illustration. I know we need to make this a little bit more prominent. So if you click it, it's going to open up the full PDF. Just give it a second. So at some point, you or the client may want to kind of get into the weeds in terms of how the policy works, contract language, crediting rates, etc. So you have the full illustration here. All the numbers should match. I don't think we really need to go too much into this. I'll leave that to the comments. If anybody wants to ask a question about an illustration, I'm happy to dig into that. For now, we'll just skip it. We default to Vitality being on these policies. So if you don't know Vitality, it's a wellness program, encourages healthy living. I was a bit of a skeptic on Vitality when it first came out. And what won me over is if you talk to anyone with Vitality, they are engaged. You know, that they typically have a Fitbit or more common an Apple Watch, or they have it on their phone. And most of the people that have it check the app nearly daily. We got a couple guys in our office with the app, and they're always talking, oh, I got a Starbucks gift card. Oh, I got an Amazon gift card. So there's all sorts of goodies. But when it comes to policy performance, the nice thing is that Vitality can reduce your cost of insurance. It can reduce it up to 15%. Of course, you can optionally get an Apple Watch as well. I really wish Mike could join in right now because he could really kind of give the details on Vitality. Definitely not giving it justice. So we do have links here. You know, a couple of the nice links are like, this is like a cost of care. So it's going to typically come up of what does long-term care cost. So we're in California. I'll click that. And this is a nice presentation for a client to kind of just say, here's exactly what it costs. Sound good? And then Vitality, we kind of have the same thing. So we got a little bit about Vitality, some links to get some additional information. So we just quoted a $500,000 policy on a 60-year-old male. We like the price. What do we do next? What we need to do is we need to apply. And I'm going to go ahead and hit apply. And I'm going to start to fill this out. You can fill this out. Your client can fill this out. Whatever is easiest for you. So put in the client's home address. Can put in some employer information. We'll support any ownership type that you have. Let's keep this simple. Let's make the insured the owner. But if you like, you can have this owned by another individual, trust, business. Time to add a primary beneficiary. We're going to call her Jane Doe. List her as the wife. Optional contingent beneficiary. Thanks, but no thanks. I'm going to skip that here. And then for income, let's kind of make something up. Or fake info. Well, we will support existing insurance and replacing insurance. So if you happen to be replacing an insurance, no problem. You can add it here for the sake of your attention span. I'm going to skip that. Now we're going to hit the John Hancock underwriting questions. Apologies in advance. There's a lot more questions in the typical John Hancock app, and that's because we have to ask all the long-term care rider questions. So first we have a height and weight check. So I'm going to say I'm 5'10", and I'm going to say I'm 190, and when I get off that input, this will actually tell you if you're too heavy. If you're outside the bounds, I guess I'm good, so there's no messages. And then we have some yes/no questions. Yes questions may have sub-questions. Let's just say no. Well, do you have a primary physician? That may be an issue. If a 60-year-old doesn't have a primary physician, so I'm going to pretend like I do. So some more questions here. So here's kind of the long-term care questions. You're going to see, are you replacing long-term care? Any other similar policies in force? Activities of daily living type of questions. We're almost done. So unfortunately, we're not at the point where we can skip an exam. I wouldn't count on skipping an exam for most of your, life with long-term care cases. You're typically dealing with 50s, 60s, 70s. And in that market, it's kind of hard to consistently find products where clients don't have to do exams. So count on this step appearing, schedule your exam. Please use the calendar to schedule a 45-minute exam. You can skip this. Maybe if you want to use your own examiner or the exam's already completed, just choose a reason. It's going to default to your client's home address, and you can change that. And based off this highlighted day, it's going to be showing the real-time calendar availabilities here on the right. So click, click, click. Let's say I'm going to take the first available, this 9:45 meeting. Yes, schedule it. Your exam has now been booked. It's done. And we have two options for the e-signature. Signed via email means that DocuSign will send the insured an email. It has an access code, which is the last four of their social, to unlock it and then e-sign it. If you have the insured in your office and they're ready to sign now, or maybe if you sent this link to the client for the client to kind of self-serve, they can hit sign now. And we're going to consent to use DocuSign and hit continue. So I have my application filled out. You're welcome to review it. I'm just a kind of a click and sign type of person, so I'm just going to sign as John Doe. Here's our illustration. So now you as the agent still need to e-sign. You'll get an email so that you can e-sign this application, complete the agent's report. All this information is kind of viewable and trackable within BOSS. So that's the process. And I do want to show you kind of a non-John Hancock related item regarding life insurance with long-term care. So I'm going to hop back into Quote and Apply. We got John Doe. Again, John's a male. This time John is in Standard Plus Health. I'm going to still say he's a non-smoker. I'm going to skip that. 01, 02, 19. Let's say we have a younger client this time. So this client is 39. And we're going to go for $1 million of 20-year term this time. So sorry, Mike, I'm not showcasing John Hancock on the term side, but the permanent sales are way bigger anyway. You're going to see something that says living benefits. It should be, I think, available in all states. Don't quote me on New York. And what it's going to do, it's going to say, hey, the cheapest price is Banner Life at $82.50 a month. And in this example, you can upgrade to get critical and chronic illness on your term. Not as rich as the long-term care benefit. We can kind of dig into that for an additional $37 a month. Ouch. Okay, so these living benefits are great. In this situation, quite a bit more expensive. As we look at this list of carriers, $82.50, and we got Transamerica down here at about $120,000. $120. That's going to change a bit based off of your metrics. If I get out of California, let's say I'm going to go to Arkansas. I have another option. So outside of California and Florida, we have living benefits on term with North American now. So in this example, still quite a bit more expensive, not as expensive, but we can upgrade and get living benefits with North American for $115. Application process is exactly the same. So I'm not going to show everyone, how that works again. But I will show you something else. So here's a demo website for long-term care, life with long-term care. And what you can do is default and set your product types. So In this situation, all I want to do is have a quoter for life insurance with long-term care. I don't want to even talk about term. So hence my message here is get a long-term care insurance quote in seconds, ready to quote, ready to go. I'm going to say sample client, say male, or let's say female this time. We're going to say good health, non-smoker, skip that, and we'll say 01/01/1955. So that's going to take the user directly to the John Hancock Life Insurance and Long-Term Care quote. We didn't see any term insurance. We didn't have to click permanent and then long-term care rider. So if you want to put this on your website, all you need to do is adjust the settings within Boss. I'll show you how that works. So on the left-hand side, you have quote and apply. You have a setup section. And then here are all the different websites I have quote and apply on. I have a lot. I'm going to hit this gear icon for this ltcrider.com website. And the way I did this is product types. All you need to do here is click it, and you can see that the only product type that I have enabled is UL with LTC. So that's all that this website is going to show. We got more and more people kind of getting more fine-tuned with quote and apply, where they'll set up websites just for accidental death, or just for simplified issue term, or just for IUL, or just for UL with long-term care. It's not difficult to do. Just set up your web page, paste quote and apply into it, and then update the product type. So the goal here was to pivot to Mike Reszkowski, who was going to give us all this great information about John Hancock's protection UL with LTC, which is what we're highlighting here. But as tech savvy as we are, we couldn't figure out two presenters on Facebook Live. So if anybody's got any questions, I'm happy to answer them, but that's about all I've got. Questions. All right, well, if no one has questions, then I'm going to go ahead and start messing around to see if I'm actually able to get, here's Mike, and Mike had to update his profile photo from, I think it was like Tom Brady blowing a snot rocket to a more professional photo because he thought he was going to be online in front of everyone. And I can't figure out how to do that. I think it's just a feature, not that anybody cares at this point, where you have to do it on your mobile app, and I'm on a desktop. So thank you so much for being a part of our webinar this morning. If you have any questions, call us, email us. We'd love to start writing some more permanent insurance on quote and apply. We just had our record month, so, and I guess, you know, it's the last day of January here, but we just had a record month for applications. So I think as an agency, we'll do about 330 applications this month, and the majority of them are term insurance because we have selection and we've built all this, you know, these great features for term. The purpose of adding these permanent insurance is to drive up the premium size. So, you know, we get a lot of agents who might be submitting a, you know, $20 a month application, and we will take those all day. But we do want to make sure that you're aware of, you know, some different types of products, cash value products, return of premium, life with long-term care, GUL, because that same client may be a client for some of these other products. We just want to make it easy for you to communicate the value add and then and then implement that insurance. All right, so got some questions. One of them is there a waiver premium if they start using LTC? Now, Mike would be the best person to ask. So Mike, if I get this wrong, just put this in the comments. But most of these Life with LTC products will waive the premium for the LTC rider when you go on claim. That doesn't mean they waive the cost of insurance for the life insurance. They just waive it for the LTC portion. And if we talk about, spend down of benefits and how that works, John Hancock in particular, their product works, I think, on a percentage basis. So I'll give you an example. Let's say you have a $500,000 policy, and let's say you pull out 4% of that, which is $20,000 in your first month. Well, how does that impact your cash value? And I believe that they just use a percentage for the cash value. So yes, your death benefit will decrease from $500,000 to $480,000, but your cash value will only decrease by 4%, not by the entire $20,000. We have other types of products that have some nice features. I mean, like Nationwide has kind of a great feature where it has a no lapse guarantee rider, and essentially the policy can't lapse while the client is on claim. So each contract works a little different. I think that's it. So if anybody wants more one-on-one training, call us, email us. We can set up something at your office, kind of like a go-to meeting, or just chat about your opportunity. All right, y'all. Have a fantastic Wednesday. And I expect lots of John Hancock Life with long-term care applications out of everyone.